Good morning, afternoon, evening, night, wherever you are when you are watching this video. As I am recording this video, it's Saturday 21st of October in a sunny Santander, which is a city in the north of Spain. If you've not been to Santander yet, I think you should put it on your travel list because I think it is beautiful here. I had a nice couple of hours of training outdoors this morning and now I'm back to some of my weekend business, which is following the markets through the lens of psychologist and statistician. My name is Jimmy Leppink. I have an interest in all kinds of research in education, psychology, healthcare, and analytics. And among the things that fascinate me about financial markets are investor and trader sentiment, decision making, and the statistical modeling of commodities, stocks, interest rates, and a few other things around the markets. Things that require the combination of my two professions, psychologist and statistician. In terms of stocks, I follow most of all the European markets. I am based myself in Spain right now. Before I lived in the UK and before that in the Netherlands. And I follow stocks of companies listed on the Dutch, German, French, and Spanish large cap indices, as well as stocks of companies that are part of the Dutch mid cap and small cap index. Before I get started, it is important to note that financial markets are not my profession. I have a full-time job which has nothing to do with financial markets. It is just a free time activity. None of the content of this video should be used as investment or trading advice. I just want to share some analyses that I typically run with whoever has an interest in financial markets and is looking for ways to do their own analysis. So in this video I will focus first on a few large cap indices and next on a series of individual stocks from different sectors and industries. I start on four European large cap indices, the Dutch AEX, the French CAC 40, the German DAX 40 and the Spanish IBEX 35. So let's start with the AEX. And before I explain the chart, first a note on where I get the data and charts from. So the data you can get quite easily from a number of websites and allow you to download data for free, including Yahoo Finance, which is the website I use frequently. And then for all statistical analysis really and charting, I use an open source and freely available statistical program R. Which packages within R I use for statistical analysis depends on the exact analysis I'm going to run, but all the charts are done in a package called ggplot2. If you want to know more about ggplot2 or statistical analysis packages that I use in my context, my email address is in the description below this video and you can also leave a comment. So in the data files that you can freely download from websites like Yahoo Finance, you will have access to a range of values of a stock for a single day in a period you specify, including the day's opening price, the high of the day, the low of the day, and the closing price. All of these are provided with different colors in this chart, by the way. Next, either within the CSV that you download or within R, you can calculate whatever variables you want to use. In this specific example, I have calculated two so-called moving average trend lines and two moving median trend lines. Two of these trend lines, the purple ones, indicate the average and median respectively of the past 65 trading days, which is roughly speaking 3 months or 1/4 of a year. And the other two trend lines, the golden ones, indicate the average and median respectively of the past 200 trading days, which is nearly 10 months in trading days. Especially the 200, the line of 200 is used very commonly in trading. The vast majority of weeks in stock markets have 5 trading days, Monday, Tuesday, Wednesday, Thursday, and Friday. Some weeks have fewer trading days due to holidays of some kind. I use these trend lines that I just mentioned to define so-called uptrends and downtrends. And to not enter in too much detail and make this a very long video, very briefly put and skipping all kinds of nuances for now, whenever the observed data are above the trend lines, I consider that we are in an uptrend, whereas when the observed data are below the trend lines, I define that as a downtrend. So here we see the trajectory of the Dutch AEX index since the start of 2020, which was just before the start of the first COVID lockdowns, all the way until yesterday, 20th of October 2023. We see the COVID-related very fast move down on the left, then a very nice move up until its peak in November of 2021, which we have not seen again on this index. 2022 was not a good year for stocks, especially until mid-October, which is now about a year ago. We had a decent rally after that, since mid-October last year, at least in the index, which of course does not mean that all stocks in that index moved in that direction. But we reached a lower peak than the one in November 2021, and we dived under the trend line, so we are now back in a downtrend. As you can see in the chart, the current level is around the median value, the second dashed line, and is around recent lows as well. If it holds here, it may reverse to a new uptrend, but if it does not hold here, it is well possible that we will see further moves down. We are currently at just over 716, but if this level does not hold, then further drops to below 700 become more likely. The picture is somewhat similar for the French CAC index, the main difference being that the CAC index did recently reach a peak above its peak of late 2021, yet it seems we are currently in a downtrend. A similar picture for the German DAX. It is back below 15,000, is under the trend lines and is steering down. And finally, also a similar picture for the Spanish IBEX index, which is with the difference that the IBEX never reached its pre-COVID highs. Does it mean that from here the indices will continue to go down? No, regardless of which technical indicators we use, we cannot simply extrapolate tendencies from past weeks or months to next weeks or months. And market sentiment is something that can change quite quickly. For example, mid-October last year, when all major indices were moving down, only few people considered a recovery a likely scenario. Yet we have seen decent rallies of major indices in Europe and elsewhere since. In Dutch, we have a saying that goes something like this: results obtained in the past provide no guarantee for the future. Although there is serial correlation in time series data, meaning that given past trajectories, we may provide reasonable ranges for prices in the next days or weeks, anyone who tells you that an index is going to be exactly price X at this and this specific time point in a week from now or so is probably guessing, and such guesses rarely come true. Next, I'm going to share a series of stocks from companies listed at the four European large cap indices that we just had a look at, and also some companies from the Dutch mid cap. Reason for the latter is simply that I have an interest in specific companies in the Dutch mid cap index, because I think that in different markets across the world, quite a few mid cap and small cap stocks have come down by a lot and not enjoyed the rally that large cap indices saw since the October lows last year. In my view, these moves down, at least in the case of several companies that I am following, have more to do with the sentiment than the financial performance of the companies. Sometimes markets are dragged down because of sentiment, and then even good companies come down with it. So I think I'm following some of the companies in the Dutch mid cap index that are following that pattern. They are financially sound, but market sentiment is not really good. So I include these stocks in my analysis as well. Some of them I will actually show in today's list. The list that I'm going to show is by no means exhaustive, meaning there are many companies that I'm following, but with the sample of stocks that I've selected, I hope to give a bit of a taste of moves of companies in different sectors and different industries. And the time window that I will use for these stocks is 2023 year to date, so since the start of this year until yesterday's close. So I will start with a few companies in the consumer staples and cyclicals sector. And first of all, Ahold Delhaize, listed on the Dutch AEX, a large company in the grocery stores industry. In this and next charts, by the way, gray dots represent the daily opening price, red dots the daily low, green dots the daily high, and the blue dots underline the daily close. The horizontal dashed lines indicate the lowest high, the median, and the highest low observed in this time window, and the vertical dashed lines indicate ex-dividend. In this graph, I do not correct stock prices prior to ex-dividend dates for the dividend, but instead use vertical lines in combination with actual stock prices across the range to appreciate both the trajectory of a stock in a given time window and magnitudes of dividend. So Ahold had a nice rally to over 32 euro per share, but since then has come down and is now at levels around those seen at the beginning of the year, basically erased most of the gains. Inditex, listed on the Spanish IBEX index, textile giant, had a nice move up, but is now back around the median closing price of this time window and around lows seen quite recently. If it holds here, it can reverse, but if it breaks below the current area, it has some room to go down further. LVMH had a nice move up, luxury company, but has since lost all the gains of this year, and maybe things will look different in a few weeks from now, but it is, in my view, not yet showing convincing signs of bottoming at the moment. This is pretty much still steering down. Mercedes-Benz. Well, as I drive a Mercedes-Benz myself and like the company, I had to put this one in. Although apart from personal interests, it is good to also include a company in the auto business as well. Well, I have to say that the stock is currently not going as well as my car. It went below the lows seen right after the latest dividend moment, and it still seems in a downward trend. And the last one in the series of consumer stocks, the Dutch Just Eat Takeaway. This one used to be in the Dutch AEX index but moved to the AMX or mid-cap index. The food delivery business was a brilliant concept in times of the lockdowns and many people still use the service, but unfortunately the stock has been in a long downward trajectory since its peak over 100 euros per share at some point during the COVID highs. Yes, this one is currently about 90% or so below its peak, which is interesting because in my view it seems there is still a lot of value in this company, but the market does not see it that way. Disclaimer, important, I am not positioned in Just Eat Takeaway myself, have no other specific interest in the business. So when I say I still see value in the company, it's not because I will make profit out of a higher stock price, for instance. In this one, there are no vertical lines because this is the only stock in my overview in this video that does not come with a dividend. I'm personally more attracted to dividend stocks because they give somewhat of a periodic income that you will either have available as cash or you can use to buy more shares. And it does not seem that dividend is on the horizon for this company, at least not any soon. Next, one example from technology, more specifically from the semiconductor industry. ASML Holding, which is one of the major companies in the Dutch AEX, and by not so few people considered somewhat of a flagship of the Dutch economy, had an impressive run-up during COVID, all the way above 770 euro per share in November of 2021, but then took a dive all the way to just below 400 euro in October last year. Had a very nice move up until at some point, not so far from the 700 actually again, but has come down since. And this week's earnings update has been received with somewhat mixed sentiment, especially the outlook is considered somewhat conservative. So let's see where this one goes in the period ahead. Next, a few financials. Starting with BBVA, a bank that is part of the Spanish IBEX. had a very good year so far with nice moves up despite two dividend moments. Erased most of its gains since the start of the year when the Silicon Valley Bank panic kicked in, which is a moment when many financial stocks came down considerably, banks and insurance companies. But then quickly recovered, came down a bit this week, but while most stocks had a tough week and the current level is still above the most recent low, and as long as we see higher highs and higher lows, we continue, or we can consider that we continue in an uptrend. Allianz Insurances. Is this one going up or down, sideways? Not so sure. Now below the median close of its time window and below recent lows, so one may wonder, was this the peak and will it continue to move down or will it recover from here? Another type of financial here with Deutsche Börse, which is in the stock exchange industry. Well, this one has erased its gains from earlier in the year. Then communication, another sector, communication. Deutsche Telekom I have selected for today's video. Currently around its median close of the time window, and the second dashed line, the one in the middle, the horizontal dashed line. This is this a recovery from recent lows? Well, we see a higher low, but also a lower high. So we will need to see in due course if this is breaking out to the upside or to the downside. Industrials, taking off with Airbus, the aerospace and defense giant that is part of the French CAC index. This one had a nice performance and actually fairly in line with the average one-year price target provided by analysts in the first half of 2022, which then was around €140 per share, while the stock back then traded at around €100 per share. Indeed, it peaked not far from €140 per share, is currently hovering just above 120 per share, and this is an interesting area, whether it holds, either it holds here and eventually reverses, or if it doesn't hold the 120 level, it has considerable room downward. But okay, we're not there yet. We'll see where this goes. Signify, a Dutch lighting products and systems company that once was listed, actually until earlier this year, was listed on the Dutch AEX, but then at some point moved to the AMX or mid-cap index. Back for the third, fourth time, around €24 per share. Seems to have had solid support there. Let's see if it holds. Real estate. Here I show the chart of Eurocommercial Properties, which is a company that I invested in until some point not so long ago, and then decided to close my position with a modest net profit because I think the real estate sector is not in a good position, and that will have an impact even on companies that have a good management and decent financial shape. That said, this company remains on my watch list because it owns and operates shopping centers in Sweden, Belgium, France, and Italy, which are all European, yet quite different real estate markets, and therefore I include it in my analysis of stocks when I want to see how the real estate sector, or European commercial real estate sector in particular, is doing in the stock markets. Healthcare, one of my favorite sectors. I work in research and trading in healthcare myself, that's my actual job. Although the healthcare sector has obviously been facing a lot of challenges for a long time, especially in recent years, the idea that my work is contributing to better training of current and future healthcare professionals is very rewarding to me. So I'm very happy in this sector. I'm not currently invested in anything in the healthcare sector. Okay, here, EssilorLuxottica, that's the one that I've chosen for healthcare. The thing is, healthcare is quite a broad sector, which with quite different kinds of industries that also the stock markets behave quite differently. One very volatile area in healthcare, for example, is biotech, which is an industry that I do usually follow and also made some very nice gains at some point in the past, but have not included in today's video. For today, I just provide this one from the medical instruments and supplies industry listed on the French CAC index, which is currently approaching its March lows. So this is an interesting area to watch. It could actually find support here in reverse. Let's see. Basic materials. This is another one of my favorites. I would say my second favorite sector. I study both prices of materials over time, especially gold, silver, and copper, that I will probably spend some future videos on, and prices of stocks of companies that operate in the basic material space as well. I sometimes tell to my family and friends that during the week I work in healthcare. My job from Mondays to Fridays is healthcare, although in the weekend, as a scientist, I also spend a fair amount of time on reading literature and doing research, but well, the job is centered in the weeks Monday to Friday, and then in the weekends I spend quite a bit of time, more time actually, on basic materials, commodities, and other things. They have fascinated me for a very long time, and I think I will spend a few videos on basic materials in the near future. Okay, let's start with one from the metal business. Here we have steel giant ArcelorMittal. In my view, robust company, yet heavily dependent on iron ore and steel prices. This is this is one of the risks with many companies in the basic material space, that they will heavily depend, or stock price will heavily depend on the prices of specific basic materials that those companies produce or mine or they use for some products. So in this, that's also the case for ArcelorMittal. It's in the iron ore and steel business, and so yeah, it depends heavily on the prices of those materials, which in times of recession or fears of recession tend to move down rather than up. Looks like somewhat of a falling knife at the moment. Could fall further, considerably from here actually, especially when you take a longer time window. Although around the times of last year's October lows, it also had a swift move down to those levels, around 20. Not sure if it's, yeah, well, just below or just above 20, don't recall exactly, and then nicely recovered. The stock is pretty volatile. That is something that has to be said. And in the statistical modeling that I do on stocks, this is one of the stocks that I struggle with most. It's this one I find hard to model. Then, okay, AMG Critical Materials, another example of an, in my view, strong company that is heavily dependent on material prices. In this case, among others, lithium prices, which, well, reached a peak in November last year and then got hammered. There is some expectation that that hammering of lithium prices is over and that we will see somewhat of a recovery. And over the past 5 years, lithium prices are still relatively high, or at least elevated compared to most of that 5-year period. So that might facilitate somewhat of a recovery, but right now this stock seems to be diving off the chart. Okay, next one. L'Air Liquide, listed on the French CAC, not in the metal space, but in the gas and energy solution space, including hydrogen, nitrogen, and oxygen. Had a nice run up until not so long ago, but is now steering into an abyss. But also close to what may be a support area around 150 levels that we saw in February, March of this year. So yeah, it could find support there. OCI, one of my favorite companies, a key producer and distributor of ammonia, fertilizers, and nitrogen-based solutions for agriculture and industry, as well as methanol for fuel. Yes, also for shipping, for instance. I could spend more time on this one because this is a company that I have followed for quite some time already. Made some money with trades in the past. Have a long position since a while ago because I believe in this company's mission. Think it's financially solid and it gives very nice dividends. For instance, this year in April, shareholders received €3.50 per share in capital returns, share price at that point was around 30 euros. So this also explains a sudden drop in share price at that vertical line. And coming week it will return another 85 euro cent per share on dividend over the first half of 2023. I personally like dividends because even if market sentiment drags stock prices down temporarily, which is the case even for good companies, the dividend provides a periodic income that you can use either as cash or, if the stock is temporarily cheaper, like this one, buy more shares. Anyway, this one has somewhat recovered from its recent lows, just above 20. That was a steep decline, but then we've seen some recovery. It is finding strong resistance though in the 26-27 area. Breaking this resistance may require a positive update from an ongoing strategic revision of activities that the management actually announced earlier in the year. Not sure if it was March or April. I think I don't know if it was the last quarter of 2022 update early in the year or the Q1 update of this year, but somewhere in the first half of the year, the management, the board announced a strategic revision of activities that they were going to undertake, including a possible sale of some activities as well as a revision of its current listing on the Dutch AMX index or possible future listing on one of the main indices in the US, for instance. Although it's not clear what the outcomes are going to be, when the outcomes of that strategic revision will be communicated, I think many shareholders are expecting something soon, and perhaps even in the next earnings update later this month. Finally, energy and utilities, often considered two separate factors or sectors. I tend to study them together because although companies are commonly labeled as either of the two, several of the companies that I'm following in this area have features of both, so I label them together. Shell, one of the stocks that, contrary to much of the stock market lately, has been defying gravity and continued its move up. Solid company. Investors in this one have seen nice gains since the start of this year. Although it remains to be seen if the apparent peak on the right is just because last week was not a good week for stocks overall, or this is indeed a temporary peak and we will see somewhat of a correction downward from here. SBM Offshore, this one is not looking good. Not all that is energy has been going up this year. Gave investors a nice dividend of about €1 per share back then in April, some 7% of the share price, but it has not been performing well. Let's see if it can hold around its most recent low and reverse from here, or another move down is in the card. And finally, Iberdrola, listed on the Spanish IBEX. I'm not invested in this one, at least not yet. But it is on my watch list because I consider this one an over time relatively low volatility dividend stock. Yes, it has come down a bit lately, but on the longer time horizons, you see that this one has had substantial gains, fairly stable gains, especially since about mid-2012. On the short run, it will be interesting to see if the recent low, just below €10 per share, holds. In which case we could see support on or just around that level soon. Okay, so far the market update, European market update for this week. I hope you found this useful, interesting. Any comments, questions, ideas, suggestions for future videos or content of this video, just leave a comment below the video or contact me using the email address that I have left in the description just below. Bye bye, see you soon.